The world of cryptocurrency has been taken over by XRP. I am sure you are wondering why it's like this and what does this mean? And why is XRP becoming the top pick for everyone? We're going to explain all these questions and explore how XRP is on track to reach an astonishing $10,000 per coin. Let's start with the recent performance. XRP has been showing robust growth over the past week and has continued to thrive in the last 24 hours, which is definitely a positive sign. It's important to note, however, that in the near future, a dip in XRP's value seems likely. This presents an incredible opportunity for all of our viewers to potentially earn significant returns considering XRP's long-term prospects are extraordinarily promising. We'll be discussing both aspects today: the short-term challenges, including upcoming regulations, the broader crypto market's hurdles, and the manipulation by big players like JP Morgan and BlackRock, as well as the long-term bullish factors that could propel XRP to that coveted $10,000 milestone. You are all welcome to Crypto World Educate, your number one go-to for all things XRP. Kindly smash that like button, hit subscribe, and turn on notifications to join our community. Now let's delve into this $10,000 target. For many, this figure might seem far-fetched or unrealistic. However, by understanding XRP's aim, mission, and strategy, the feasibility of this goal becomes clearer. According to a recent report by the famous Crypto Alert, XRP is expected to hit $10,000 as it sets its sights on surpassing SWIFT in the realm of global finance. Previously we've touched upon how SWIFT facilitates trillions of dollars in transactions daily. To put it in perspective, more than $4 trillion is processed through the SWIFT system each day. Now let's compare this to XRP. In the last 24 hours, XRP's transaction volume was about $600 million. That's a significant gap. But imagine the potential growth for XRP if it starts handling trillions in transactions. Right now, XRP's market cap stands at $33 billion, with just $600 million in daily US transactions. Let's imagine a scenario where this figure escalates to $4 trillion every day. This growth would mean adding several zeros to XRP's value, making the $10,000 mark a possibility. Moreover, a lesser-known fact about XRP is that it reduces its total supply with each transaction, thanks to its unique burn mechanism. This gradual decrease in circulating supply, combined with potentially handling trillions in daily transactions, sets the stage for a significant value increase. Furthermore, the potential adoption of XRP by governments for cross-border settlements is another critical factor. We're going deeper into this because it's a huge part of the equation and speaks volumes about XRP's future prospects. Currently, there's a noticeable shift in global financial dynamics, with the US dollar experiencing a decline in its international dominance. Countries are increasingly engaging in transactions using alternative currencies. A prime example is BRICS, the coalition of Brazil, Russia, India, China, and South Africa, which is now developing its own currency. This initiative is gaining traction with other countries like Saudi Arabia joining in, aiming to reduce their dependence on the US dollar. This shift creates a substantial opportunity for XRP to become a key player in settling these burgeoning international trades. The volume of trade conducted in these alternative currencies is staggering, running into trillions of dollars daily. This scenario presents a vast potential for XRP. It has the capability to not just integrate into international trade, but also to potentially align with the SWIFT banking system, tapping into a market of trillions in transactions. However, it's crucial to balance this long-term outlook with a realistic view of the short term. As we've indicated before, there's a possibility that XRP's value could temporarily dip to as low as 30 cents. Investors and followers need to be aware of and prepared for these short-term fluctuations while keeping an eye on the promising long-term potential. In the coming months, we could see XRP's value drop by as much as 50%. What's driving this potential decline? If you've been keeping up with recent financial news, you might be aware of the heightened scrutiny crypto markets are facing from regulatory bodies like the CTFC. Their actions have already impacted major players in the crypto space, including Binance, which operates both in the US and internationally. These developments are not just local phenomena. They have ripple effects across the global cryptocurrency markets. The situation with Binance is particularly noteworthy. Following the news about CZ stepping down and the company grappling with fines and leadership changes, there's been a noticeable impact. Yet despite these challenges, the overall crypto market has shown remarkable resilience. However, this doesn't completely dispel the uncertainties looming over the market, especially as the CTFC has signaled that Kraken and Binance won't be the last exchanges under their scrutiny. This scenario paints a picture of a turbulent period ahead for cryptocurrencies, including XRP. Investors and enthusiasts must stay informed and be prepared for these fluctuations, understanding the broader context of regulatory actions and their potential impacts on the market. It's a hard truth, but not all crypto exchanges maintain a full reserve of customer funds. This makes them particularly vulnerable to actions by regulatory bodies like the CFTC. We've witnessed the repercussions of such situations, notably with the FTX debacle. Similar incidents are likely to emerge, especially with the U.S. Department of Justice's focus strategy on the U.S. digital asset sector. Recently, a clear example of this heightened scrutiny was seen when Commissioner Pham of the CFTC commented on their first-ever case against a crypto compliance officer. This move is significant as it aligns with past SEC actions targeting individuals within the crypto space. SEC Commissioner Hester Peirce has previously emphasized the gravity of charging compliance officers, highlighting its implications not just for the individuals involved, but for the entire compliance profession in the financial sector. These developments signal a tightening noose around certain practices within the crypto industry, underscoring the need for transparency and strict adherence to regulatory standards. Such actions by the CFTC and other regulatory bodies have far-reaching implications, not just for the exchanges directly involved, but for the entire landscape of digital assets. The recent developments in the crypto compliance sphere highlight a stark reality. The case involving an employee charged with compliance breaches reflects more than just a failure of an individual. It underscores the importance of having a solid compliance framework staffed by professionals with integrity, expertise, and experience. This situation serves as a clear signal to the crypto sector. Stringent compliance measures are imminent. However, the shape and structure of these impending compliance requirements remain uncertain. The current regulatory framework, primarily governed by the SEC, isn't entirely suitable for cryptocurrencies. The unique nature of digital assets, often not fitting the traditional definition of a common enterprise, calls for a new set of regulations. As these new rules are developed and implemented, we can expect significant changes in how decentralized finance and DeFi operate, as well as the functioning of centralized exchanges and other aspects of the crypto world. Understanding and adapting to these evolving regulations will be crucial for the crypto industry. It's a time of change and adaptation, and we must stay informed about how these developments will reshape the landscape of digital currencies and assets. The impending regulatory changes are poised to fundamentally alter the cryptocurrency landscape. Every crypto business currently in operation will need to undergo significant adaptations, which inevitably involve substantial financial investment. Compliance with the new regulations will likely entail signing new agreements, paying additional fees, and possibly registering under an entirely new regulatory framework. This transition won't be immediate. It will require time and resources, potentially slowing down our current growth trajectory. Moreover, there are businesses in the crypto space that may not be fully compliant at present, possibly even violating existing laws. This could lead to serious repercussions, not just for those entities, but for the entire industry. Such developments will have a notable impact, particularly on altcoins like XRP. However, there's no need for concern. I'm here to guide you through these changes. Over the next few months, I'll be providing detailed updates and strategies to help you navigate this evolving landscape. Stay tuned as we explore these changes together, ensuring you're well equipped to adapt and thrive in the new era of cryptocurrency. Please remember that we are not licensed financial advisors, and note that the content presented in these videos is purely for entertainment purposes. We always encourage viewers to conduct their own research and consult with professionals before making any financial decisions. Kindly do us a favor by subscribing to our channel, giving us a thumbs up, and hitting the notification button. Remember, knowledge is power in the world of crypto, and we're here to empower you every step of the way. Get ready to unlock the door to a digital revolution.